Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's go over just what in the hell is happening as per usual. Never really a boring day with the stock. I mean, actually, no, we had some boring days here to be fair, but recently it's been pretty anything but boring. So with that being said though, let's just jump right into it. Let's talk about what happened, what is happening, what we can expect to happen as per the usual. And yeah, if you enjoyed, don't forget to hit that like button. It does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is below for just $2.99 a month. You can access all my posts, thoughts, updates, etc. Sometimes I'll post other things. Like for instance, today I did a bit of a PayPal post, just a quick little post every now and then when I'm eyeballing something else. But nonetheless, if you're interested, again, just $2.99 a month. Very reasonable. At least I think it's reasonable. It's not really nothing. But nonetheless, let's just jump into it. Tesla closing the day in the green, believe it or not, with the market being slightly red, up about 0.5%, which is a bit of a shocker. Now, the reason I say it's a bit of a shocker is, let me go ahead and bring up, see if I can find it really quickly. But yesterday, as I'm sure some of you, I mean, if you pay attention to what, happens on Twitter or X or whatever, Elon was a bit of a... yeah, a little bit of not good. Let's just say that, right? Yesterday, he posted all these things where essentially said, I'm uncomfortable growing Tesla to be a leader in AI robotics without having 25% voting control. The voting control is not the same as having 25% ownership, if you will, of the company, right? It is different. I'm not super nuanced in that, but from what I understand, it is a different thing, but somewhat tied together, but also different. Nonetheless, the point is, he was doing all these posts yesterday, and let's just say, it caused a bit of a storm for me as well. Like a lot of people were extremely just going pretty critical about this and what does this mean? Like, why would he ever say this? Is he essentially blackmailing his shareholders or, whatever. So anyways, the point I'm trying to make here is that quite a storm last night occurred over on Twitter, X, whatever, by Elon. So honestly, with us being actually in the green today, is a nice little surprise, though. Of course, we did start the day quite red, right? We started the day down about 3.5% or so, I think it was. And we interestingly went to a spot, right, where we pretty much bounced almost to the T at the same level that we bounced all the way here on the left with this left shoulder. Don't forget, we're still potentially setting up this inverted head and shoulders. Now, obviously, before I really dive into it, overall, there's good news, there's bad news. In my opinion, there's slightly more bad news than good news for Tesla stock in terms of just technical analysis, but there is still hope for the bulls. So let's just talk about that, right? So as I was saying, we pretty much gapped down once again, and then we essentially came down all the way pretty much to the exact same level that this gap down over here came down to before a massive rally. Now, obviously, it doesn't mean it has to play out like this, right? A lot of people thought this candle on Friday was that candle that would, essentially begin the rally. Clearly, that wasn't the case. But nonetheless, we did end up actually bouncing pretty much exactly where this bounced. And so far, it looks like a pretty okay candle. And the main thing to note here is the fact that we did go from red, pretty red actually too, to green, which is great to see, especially on a day where the market is pretty much flat or red. Nice to see that, right? Bit of an outperformance by Tesla, which is a rare thing nowadays, it feels like. But that's great, right? And the main reason I bring up the whole red to green is because, well, we closed above yesterday's close. That's a good sign to me. That's important. And arguably, just as, if not more, and probably more important in all honesty, is the fact that we held the trend line, right? It looks a lot better on the weekly. Let's go on the weekly. It looks a lot cleaner here, in my opinion. But we held this trend line, right? We broke and we gapped down below the trend line. We oversold it and then shot back up, recaptured the bottom part of the bottom trend line, right? And we held above it and we closed above it, at least the daily. We'll see how the weekly closes. That's the most important thing. It is a shorter week, but I really need to see how this weekly closes this week itself, essentially, obviously by Friday, right? Friday's close. Because we're still on thin ice here, though. Even though this was an extremely crucial recapture today, we're still on thin ice. And the main reason I say we're still on thin ice is because, well, we still have the green line here, which is the 200-day moving average or the 200 moving average on the weekly, right? That's number one. We're barely holding above it. It's around, what is it right now? 218.5 pretty much. We're at 220, just shy, right? Not very far from it. Pretty darn close to it. So we want to really make sure we hold that. That's important. On top of that, the actual trend line itself is pretty much roughly where the 200 moving average is, which is also pretty much around the 218-ish, give or take, a level as well. Also crucial that we do not close the weekly candle below that, because there's always a possibility that we get this nice little pump and then it just fades into the rest of the week and then we end up closing below it and things are looking substantially more uncertain and shaky and really less bullish overall. Because don't forget, so keep in mind, so if we go to the daily, right, take a look at this. So the MACD, right, it crossed bearish over here. The green crossed the red, and it completely sold off. Now, to be fair, like I said before, the MACD isn't always this powerful of an indicator, right? In this case, it happened to work out beautifully. Not always is that the case, right? For instance, back here, we crossed ever so slightly bearish, and then what do we do right after that? We crossed back to being bullish and rally. So the point is that, the MACD isn't always this powerful, if you will, but it did cross, and we did have a pretty substantial sell-off, at least in this case. The weekly time frame is also crossed to the downside, right? That's something that's a little concerning here because, again, we have a cross to the downside. It's been crossed to the downside pretty much ever since this real sell-off really started back here. And so far, it doesn't really show any obvious signs that, it's going to stop, or it's going to decelerate, or it's going to essentially go back up the other way, So we're still technically bearish on the MACD on the weekly, which isn't really good. So there's a lot of bad news, but there's still some good news, right? Again, so you have to take all this into consideration and understand the position that Tesla is in. The way I look at it is pretty simple right now. I just want to see how the weekly candle closes. Do we close below the 200 moving average and or really below the pretty much 218 really, which is below the trend line, or not? Or do we hold? That's the question. And assuming we hold, well, that gives us some hope into earnings coming over for next week, maybe even a rally into earnings as well. But ultimately, that's the most important thing I am personally looking at. Now, when we did gap down today, you'll notice that there's this blue line. Well, that's the VWAP, right? From pretty much the lows all the way down here back when we were shockingly at $100 per share almost. And that's the VWAP. It's a pretty respected one, right? We've bounced off of it several times. We gapped down below it, kind of acted as a resistance a little bit here until we finally found strength and pushed back above it. We bounced right around it over here and pretty much roughly held it as well. And now we're back at it once again. Will we bounce off of it once again, or will this time be the time we finally truly collapse below it? Who knows? Nobody knows. But time will tell, as per usual, and react accordingly. Now, overall, the way I look at it is as follows. I did de-risk, by the way, today, and then I re-entered again because Tesla held where I wanted it to with a very tight stop loss. Pretty much the way I look at it is as follows. To me right now, where Tesla is at, the only bullish thing about this situation is that if there's a place to bounce, if there is still a way to keep Tesla's bullish case intact with potentially the inverted head and shoulders and really just overall the overall the chart perspective, if you will, to still keep it looking bullish without it. Like, if it falls below this and closes and starts closing below this bottom part of this overall massive weekly since all-time highs wedge that we are in, it will be ugly. Like, Tesla will come back down to potentially even the mid 100s. Like, it really wouldn't shock me, right? That absolutely can be a possibility, which is why this is really crucial the way we're in. But with that being said, because we're so close to that pretty much deciding level, if you will, like I said, about 218.5 to 218 roughly itself, we're not very far from it. We're only like maybe $2 away from it, right? So to me, the risk reward here now, I view it as really good now that we ended up at least closing the daily above that level and from red to green. If you enter shares here, just my opinion, not financial advice, with a tight stop loss of pretty much under 218, the risk reward, in my opinion, is pretty darn good here. Obviously, it doesn't mean it has to play out. It can absolutely still plummet, but that's the way I am personally looking at it. And that's actually what I am playing right now. So that's the way, that's the main thing I'm looking at, right? If we start closing below this, that's going to be really bad. This will be a massive loss to the overall bullish thesis, and the bearish thesis, in my opinion, becomes substantially stronger. Now, those are the main good news, right? That we're pretty much at the level we need to bounce, and we are bouncing where we really, truly needed to. That's good news. The bad news is the fact that, well, other than the 200-day moving average, or just moving average, I guess, on the weekly, which we are holding barely, we're below everything else. 50-day moving average, below, potentially even as acting as a resistance. 100-day moving average, we're below that. 21 EMA, we're below that. We're below all of these. Let's take a look at the daily. It's even worse on the daily. We're below all of these on the daily. 200-day moving average, right here, sitting at pretty much 231. We're below that. 50-day moving average, 237, 238. We're below that. 21 EMA, pretty much the same as the 50-day moving average. We're below that. And the 100-day sitting all the way up here at pretty much 242. We're obviously below that. So we're below all of these, like, just, the main moving averages that, matter, if you will. We're below all of them on the daily, every single one of them. That's obviously not ideal. And there's a lot of resistance above us. So even if we do get this pump, even if we do get this rally, how far can it really go, right? Because there's a lot of resistance and essentially just overhead above us. That's the problem. It's not that it's impossible. If there's a stock that can just casually push right through it for what seems like should be, in theory, like extremely difficult, it's Tesla. Absolutely, it's Tesla. But with that being said, taking into account that, there is potentially a lot of overhead, issues above us. For instance, this massive green rectangle. This will act as a resistance now. If we come back up to it, it absolutely will act as a resistance, which will also coincide with this green line. Remember this ascending channel that we were in, that we ended up acting as a support initially, but then we broke right through it, acted as a resistance, and then we continued selling off. And now we're pretty much going sideways for the last couple of days, give or take, in terms of closures. That's pretty much where it also coincides with this green rectangle. That's the problem here that we find ourselves in with the 200-day moving average, pretty much at the top of the green rectangle. A lot of supply is in that area. So that will be a problem. And demand really, I mean, there's definitely demand here, but the true demand, in my opinion, is in the low 200s. That's where the real demand truly lies. And if we happen to go to the low 200s, well, we also broke this massive wedge that we are in. And in my opinion, it's going to look pretty darn bearish unless we pull essentially what I always like to call the Netflix, or same thing. We broke down below something that really shouldn't have, closed the weekly below it, and then earnings rocketed it back up. Maybe Tesla will do the same. Who knows? Nobody knows. But the point I'm trying to make here is the fact that overall, Tesla is definitely looking more bearish than bullish if you just look at it strictly through technical analysis. But if there was a place for Tesla to flip that around, to essentially keep the bullish momentum alive and potentially even start flipping some bearish momentum into being bullish once again, this right here is the spot. Like, it has to happen pretty much right around this area right here. It has to happen here. And if it doesn't, I think Tesla will turn into a pretty bearish stock. I will take I will exit those shares I just entered. I'll take that, tiny loss because I just entered it here. I already took a loss before that to kind of de-risk. I am still holding shares, and I obviously bought more, but the point I'm trying to make here is the fact that it has to happen here. That's all I'm saying. It has to happen here with the tight stop loss under 218. And that's the way I look at it. It's really that simple, in my opinion. So we'll see how it plays out. Again, I don't want to sound like a bear. I really don't. I really wanted to rally from here. I really truly do. And I think there is a possibility. I think there's a very real possibility it does. But again, if there's anywhere for it to happen, this is it. It has to happen here. It's pretty much do or die. And I genuinely mean that. It is do or die here for Tesla, because if it doesn't find a spot here to rally and we just sink down even further, and especially close the weekly below the 200 moving average and 218, that's not going to be good. That's not going to be good. It would need quite a substantial earnings to, essentially make that a false bearish breakdown and essentially make it a bear trap. So we'll see. But that's the way I'm looking at it right now. Take a very quick look at options over here. There were some pretty massive whales that were in before, but they're completely gone now. And all we have is really this big one for 881K premium. 220 calls expiring on the 19th of January, which is this week, of course. And we have a February 16th 210 put for almost 700K in premium. Those are the two meaningful ones to really pay attention to. Otherwise, it's a lot of very small players, a lot of small bears and bulls kind of, tagging along, trying to, figure out where the hell this thing is going next, because it is truly, it's going to be interesting to say the least. But all in all, that's it for the video. Thank you so much for watching. If you enjoyed, don't forget to hit that like button. But we're in for quite a ride for the next week or two. So buckle in, strap up. And I think it might be a bit of a bumpy one. So until then, thanks for watching. Peace.